Global Financial and Economic Landscape, the 3rd of July 2026. Global financial markets entered the extended holiday weekend on the 3rd of July 2026 with mixed signals. While Wall Street celebrated another record high before the U.S. Independence Day closure, weaker economic data and a downgraded outlook from the World Bank underscored growing risks to the global economy. The World Bank's latest Global Economic Prospects report cut its 2026 global growth forecast to 2.5%, down from 2.8% at the start of the year and below the 2.9% recorded in 2025. The downgrade reflects ongoing geopolitical tensions in the Middle East and slower growth across much of the world. The bank expects crude oil to average $94 per barrel this year but warned that prolonged disruptions in the Strait of Hormuz could push prices to $115 per barrel, reducing global growth to as little as 1.3%. Markets were mixed ahead of the U.S. holiday. The Dow Jones Industrial Average closed at a record 52,900.07, up 1.1%, while the S&P 500 and Nasdaq Composite were little changed as investors continued rotating out of high-performing AI and semiconductor stocks. Asian markets rebounded strongly, with South Korea's Kospi rising 5.8% and Japan's Nikkei 225 gaining 1.5%. In Europe, Germany's DAX edged 0.4% higher, while London's FTSE 100 slipped 0.4% amid softer economic data. June's U.S. labor market report showed slower than expected job growth and a decline in labor force participation, strengthening expectations that the Federal Reserve could begin cutting interest rates later this year. At the same time, markets reduced expectations for further European Central Bank rate hikes. The softer U.S. dollar supported a stronger euro and lifted gold prices. Trade policy also remained in focus as a United Nations climate study warned that carbon border tariffs being introduced by major economies could weigh heavily on emissions-intensive industries in emerging markets. Combined with growing geopolitical fragmentation and expanding trade barriers, these developments continue to create headwinds for global investment and growth. Overall, financial markets remain resilient, but slowing growth, geopolitical uncertainty and persistent trade tensions suggest central banks may face increasing pressure to ease monetary policy if inflation continues to moderate.